One of my favorite goals in life, and it may sound a little boring, may be a bit pedestrian, but that goal is peace of mind. The ability to go to bed at night, sleep like a baby without worrying about things that are outside of my control. That was one of the reasons that I became debt free back in the day when I had my emotions shaken to the ground, the very foundation of which I built my life back in the late 1900s. Back when I entered real estate in 1998, all the way up through the crash of 2008, I had a different mindset. It was built around leverage, it was built around growth, more, building that wealth. I had some delusions of grandeur in mind, mansions, fancy cars, things of that nature. And then in 2008, when the market did indeed crash, I had 115 rental properties that had debt up to my eyeballs. We had a Dairy Queen that we bought with mostly debt. I had a 4,200 square foot home on 40 acres, debt and debt, and cars with debt payments as well. So that made me rethink my whole philosophy on life. And in doing so, I slowly, over time, became completely debt free, including our last remaining 10 rental properties, which have no debt as well. So that gives me peace of mind. Now, peace of mind is priceless, in my opinion, for where I am currently, my psychology, my stage of life. I don't need to take on nearly as much risk as I did early on when I had no money and you know, I was shaking the bushes and the trees for every opportunity that I could, rubbing two sticks together trying to make a dollar. Now I don't have to take on as much risk. Well, why would you be trading options then? Well, it's fun. It's fun, and I'm learning that I can make some money even with a conservative mindset. So, in that prelude, in that monologue, I wanted to take some risk off the table today going into the CPI report tomorrow morning. That's the core inflation report. So I'm hoping to increase our buying power by taking risk off the table, locking in some profits that are available to us. So let's take a look now as we look at the SPY right before our very eyes. It's at 409.67. So we should still be in a good position from our credit spreads. And I don't know how up to date this is. Let's click through just to see what we'd have to do to trade out of this position right now. So to close it, and we have 15 contracts, it looks like it would cost us about $45 to do so. So we have 15 contracts available to close. If we tried to do the $3, where's SPY moving right now? So it's moving up. So it would likely not fill at that number. But if we watch it just for a minute, is it going to give us some red? Because it keeps going green, and that happens. That's part of the fun, right? As you can see what it's done all day. Up and down, up and down, up and down, up and down. And now currently going up 409.73 in the green for today. S&P still a bit under at 0.03%. Dow is up 0.2%. NASDAQ down 0.41. Russell 2000 down 0.53. So let's see where we're at here. If we just put in the 4 and get it over with, will it fill? It may still not fill. So that would be $60 to close it out, and that would remove the $3,000 collateral and that risk. And it may not fill here, but because it is a credit spread, you got two sides of that trade. Okay, so there it is. So what may turn into looking like we overpaid at $60. Remember though, we collected $210. So we're $160 into the net of that credit spread. So that's not bad for less than one day, because we put that on at the end of trading yesterday, and now it's only 10:16 a.m. on Tuesday, April 11th. So I am happy with the $160 net, and then I don't have to watch SPY anymore today. I mean, I'll still watch it because it's a good indicator of what the market's doing, but I don't have to watch it from an investment perspective today. So what else do I want to look at? I wanted to look at these Bank of America puts as well. We have 5 on the table. They're at 27.50. So currently Bank of America is at 28.32. So this is the value, or I guess you can say the cost of to close this out. So it's going down. The cost is going down because right now Bank of America is up 1.34%. Now, Bank of America, you don't normally collect much premium on it anyways. So indeed, we collected $130 on the 5 contracts just 8 days ago on April 3rd. So I thought, well, do you think we can possibly close those out at, do you want to try for the 11 while we do math? Let's just try for the 11. Probably will have to go to the 12 cents per, but we would release $13,750 in collateral. So we'll just put those up for a moment and then we'll just run numbers. We'll run numbers right now at what the worst case scenario would be, which would be $60. So what would that leave? So it's 130, right? 130. If we did $60 minus 60, we'd still leave us with $70 bills. And it's on that collateral of 13,750. Okay, so if we divide it by 13,750, we get this equation, and that was 8 days ago. So divided by 8 days, we come up with this number, and then we annualize it by multiplying by 365. So it's a 23.2% return on collateral based on being able to do a similar trade given the similar numbers over and over and over again, right? So that's part of the reason that I'm not afraid to take some risk off the table and pay to do so, because we're still in the green. Even though I may have to pay $60 bills right now, I still have that $70 net profit, which could be considered an annualized return of 23.2% based on the fact that it was only in 8 days. So let's go ahead and see if we need to just replace that order. Go to the 12 and close it right now. A couple of reasons, I'll tell you that after I click through. Not enough shares. So sometimes it does this on the Robinhood. Let's go back and see if it's still pending. It may have filled right before we even knew it. So if we click through again and we put our 5 contracts in at the 12 cents per, that's $60 bills, and you're paying $60 to buy back 5 contracts, releasing the $13,750 in collateral. So there we go, $13,750 back into our buying power, and then that risk is off the table. And the other reason, if we go to Bank of America, I'll show you the other reason. Well, it's twofold. One is tomorrow's CPI report. I have no idea what's going to show on that inflation report, and even more potentially scary and damaging and risky is I have no idea how the market will respond to whatever that information is. I mean, it could be that bad news is bad news, which is the market is slowing down due to the fact that we keep raising rates and companies are laying people off. You hear about the headlines going on. So inflation, though, it should come in probably right around expectation, which would be good. It should be a good sign because inflation's going down, but is it down enough? Or, is it going to be coming in a little hotter? How will the market respond? I don't really want to know. So I want to take as much risk off the table as I can while still locking in profit. So if we go to earnings on Bank of America, they're reporting, I believe, Monday. What is the date on there? So it's the 18th. What day is that? What's today? The 11th. So that's next Tuesday. So next Tuesday, Bank of America will announce their earnings. And I was looking over here, because sometimes Zacks does a good job of predicting the earnings, and they're thinking that they might miss. So if we look, they have a current quarterly estimate of 80 cents per share, earnings per share of 80 cents. and Zacks thinks they're gonna they're gonna miss by 3 cents at 77. Okay, and we know based on what's happened recently that the market doesn't like you to miss on your earnings, especially if you also have a negative guidance, which I can see going on at this entire round of earnings reports. I believe a lot of the companies are going to be tampering down their guidance going forward with the idea that there could very well be a recession looming. Because I see the bad moon rising. Okay, so last quarter they had earnings per share of 85 cents. They beat by 8 cents. And even after the generally accepted accounting principles, they had the same earnings, and they also beat on the revenue by $309 million. So I don't necessarily need to be around on those puts, okay? Because those were 27.50 puts, and it's only at 28.33. Take that off the table, put the money in my pocket, and lock it, and move on to the next. So for now, I'm going to let you go. Continue to look through our option trades on the table. There's our buying power just went up before our very eyes. It was at 1.688 million, now at 1.722. So we'll continue to look to increase the buying power, get that dry powder stacked up in case there is some wild market movements tomorrow. We'll be prepared for that. So I got a number of things to go through with you, and I'll be coming back very soon to do so. See you in the next video.